Hello, friends. Hope everybody's having a great week. Happy Masters Friday to everyone. It is one of my most favorite times of the year. This weekend, the official start of spring, even though it's not very spring around here, but this weekend is always the unofficial start to spring, so we're excited for that. So this week, I wanted to chat a little bit about auto insurance rates and talk about what goes into it, what you should be thinking about, things like that, right? Why we're taking the information we're taking and how it's looked at by the insurance company, and basically that it's not just me deciding or any agent just deciding what we should charge you, that there is, all this goes into something and there's a rate that is derived from it. So kind of wanted to talk about what the insurance company looks at, like what are some of those things, why they look at those things. How much does your driving record matter? And how all this is kind of used together, how long does it will last for, what things you should be thinking about, things like that, right? So we'll start with the first and most important one, your driving record. Obviously, it is important, right? We look at your driving record. And most insurance companies go back 5 years. We're going to go back 5 years and look at tickets, accidents, what you have, things like that, right? Obviously, based on those tickets, accidents, and claims and things like that, everything's looked at a little differently. 5 years we go back. Obviously, the last couple years is looked at with more detail. So if you had an accident 5 years ago, that's not as big as a deal as if you had one last year. But if you had one 5 years ago and then you had one last year, the frequency is also something we look at, right? We're going to look at your tickets, your accidents, like I said, and then what those tickets are, right? So all that is kind of one thing, and it leads to how good of a rate you can get. So that is important to think about, right? Speeding tickets, all that sort of stuff, right? So that's the first thing we're going to look at, right? Second thing, and these aren't in any particular order, is your credit history. And based on that, we don't run your credit score, but it is used in conjunction to make what is called an insurance score, right? And basically, the better your insurance score, the better your rate is going to be, right? So that looks at, yes, your credit, but it also looks at the length of time in which you've been licensed and the length of time in which you had credit. So it's not just, hey, we pull your credit score. We don't do anything with your credit like that. It is just a score that is derived from your overall picture of your credit. We're not ever running it or anything like that. It's not going to hurt your credit. But it is used, right? Many insurance companies will say, hey, somebody with better credit is, a better risk overall. So the better your credit is, very often is the better that your rates are going to be. So that's something important to look at, right? Obviously, your rate is going to be whatever type of coverages we're using, right? The higher the limits or the higher the deductible, that sort of thing is going to tie into your rate, right? So obviously, based on all those factors of what we're going to insure you for, that's going to change the rate a little bit, right? So that is kind of important, something to look at, especially as you would talk to somebody else about your insurance, right? Just because they say, hey, I pay X, doesn't necessarily mean that it's the same, right? Everybody will ask, apples to apples when we quote, so yeah, don't often compare yourself to somebody else because we don't know any of those things, right? Is always important. We also look at your car insurance history. So what I mean by that is how long you've been insured, right? Somebody with gaps in their insurance, that's unexplainable, right? So, you had insurance for a year and then you didn't have insurance for a year and then you had insurance for a year and, that sort of thing is looked at more risky, right? Unless there is a reasoning, right? Like you didn't have a car because you didn't have a car. You didn't have a car insurance because you didn't have a car. Or you, were in the military and you were out of the country. Something like that makes sense. But if it is just, hey, you've lived here and you didn't have insurance, that is something that is looked at as well, right? How long you stayed with a current company. Some companies will give discount based on longevity, right? So if you were with the person before for a long period of time, that's often something that's looked at, right? So something to keep in mind. We also look at the type of car that you have and everything that goes along with that, right? So just to kind of quickly go through that, we look at what is it, right? Is it, and not, everybody always talks about, hey, if it's a sports car or it's red, it's more expensive. I can tell you, I don't ask anybody what color their car is. Nobody has to tell me if they paint their car. So that is not something that is looked at of any detail. But we're going to look at the type of car, is it, right? Is it a sports car? Is it a truck, right? Very often the liability, right? So the liability is the stuff you hit, right? Whether it be property damage or bodily injury. It might be more expensive in a pickup truck than it would be in a sports car, right? And that some of that is because if you hit something in a pickup truck or a bigger car like that, it's going to do more damage than if you hit it in a two-door convertible, right? So some of that goes into it too, all things being equal, right? So we look at, what type of car is it? How big is it? All that, is tied to the VIN. How much is it, right? That is something today, meaning how much is the car worth? Because that goes into the rate, right? As we would talk about full coverage and comp and collision. And that's something today that is way different because of what's happening with cars now, right? They are more expensive. So it's not too often that I could say that it's a good chance that your car is worth more today than it was a year ago. And we probably never could say that before. Who knows if we'll ever say that again. So that's something that we, is taken into account, right? But like I said, what kind of car is it? How much do you drive, right? Like, where do you drive, right? Things like that are all taken. How many miles do you drive a year, right? All that's taken into account as it pertains to your car and your driving. And then your age and driving experience, right? So as everybody would think, right, a young driver, little driving experience is going to be more expensive than somebody in their 30s and 40s, right? So this is true. There isn't a magic number where insurance starts to get less. Some people say 25, but as you get more experience, and if you haven't had claims and you have good driving record, yes, in your 20s you'll start to see that come down and level off for the better part of your life. What we are seeing now is that as a driver gets more experience and gets into their 70s and older, that those premiums start to tick up too. Some of that has to do with just as we would say, not all 16-year-olds are bad drivers, not all 70-year-olds are bad drivers, but your reflex is not as good as they used to be. Do you maybe not drive as much? So when you do drive, that it's not something you're familiar with, all things like that go into it, right? And we've also seen more recently that we have seen more claims in that segment of drivers. So obviously, if we see that, you're going to see the rates go up, right? So it is something that is looked at in detail as we would go through the rate. Not something that I do. It all gets put in, but that's what the insurance companies are kind of looking at. So all that is going in to you getting your rate, right? So all those things are kind of, we'll call it equally important. Some other factors that we look at are like discounts, right? Like, so do you have a home and are we bundling a homeowners with it, right? That'll change the rate, right? How many cars are on your policy, right? Because obviously if you have 3 or 4 cars, that's going to make the rate less, right? Because it's kind of think about going to Costco or a buy in bulk discount or something like that. That's what we'll very often ask, like about education and occupation and things like that. All that, based on those factors, some get discounts, some don't, some are the same. So all those things kind of tie into it, right, to make up the final rate at the end, right? So it isn't just as simple as driving record and your age. All that kind of stuff is looked at. So, but I would say, driving record is important and is something that you should take notice of. So the longer or the better that you are in that, the longer it's going to save you, or the more it's going to save you money long term, right? Obviously, we shouldn't say that, you're never going to get into an accident. That's why you have insurance. But, if you have multiple at-fault accidents and speeding tickets and things like that, is it going to be more expensive? Absolutely, right? Based on, where you live Is it the suburbs? Is it the city? And even the state, right? Even, the insurance companies are looking at weather, and all those sorts of things go into it. So all is something important to look at. So if you ever have any questions about this or anything else, reach out, DM me, give me a call, whatever, and we could chat about it in more detail. I would like to thank Steve-O for my outfit and wardrobe for today. It is very appreciated, and I'm able to see even better than normal in these wonderful sunglasses, so I thank you very much. Everybody have a great weekend. Enjoy the Masters, and we'll talk to you next week. Thanks so much. Bye.